Hello, today we will present about introducing to auditing. Before that, let me introduce you to my team members, Fiona, Martelda, Mariam, Shafiza, and myself, Hafizul. What is auditing? Auditing is a systematic process which objectively collecting and evaluating evidence based on assertions about economic events to discover the comparability between assertion and familiar standard and to broadcast the result to the targeted users. Objective of financial statement audit: to examine and ensure that there is no error or fraud occurring in the statement transaction. Distinction between auditing and accounting. Accounting is a systematic approach in which is used to create information in form of financial statement and data. Auditing is a systematic process which is used to obtain and evaluate information based on economic event and action in order to broadcast results to users. Management and auditors' responsibilities. Management's responsibilities is to ensure that the company uses the company assets for proper use, record all the accounting transactions within the entity, and to preserve the system of control. Auditor's responsibilities is to uncover and disclose error and fraud done within the entities, such as misstatement made in calculating the allowance for doubtful accounts and stolen merchandise. What is demand for auditing? Well, demand for auditing are the needs for financial statement users or decision makers, such as entity, to receive reliable information, to prevent and detect various forms of frauds and other accounting crimes from financial statements analysis of companies' operations. There are four types of audit. Number one is financial statement audit. Second is compliance audit. The third one is operational audit. And the last one is a forensic audit. Financial statement audit. A financial statement audit is used in order to determine whether the all-inclusive financial statement exists equally in accordance with specific criteria. Compliance audit. A compliance audit is used to decide whether the entity being audited has fulfilled the laws and regulations as stated. Operational audit. An operational audit is a standardized evaluation of cooperation activities in search of resources. The main of the operational audit is to determine performance and diagnose improvement. For example, for the private sector, an entity employ auditors to assess efficiency and effectiveness of entity use of computer resources. Forensic audit. A forensic audit objective is the revelation of the vast diversity of unlawful actions. Example, business of employee fraud, criminal investigation. Internal auditors are employed by independent entities such as companies, partnership, and government agency. Their purpose are to supervise compliance and functional audit within the entity and to ensure that their organizations are running accordance to the laws and regulations. It is practiced by a qualified employee of the organization. Forensic auditors. Forensic auditors are employed by a government agency and public accounting firms to determine, examine, and prevent any type of fraud and white-collar crime happening within the entity. For example, embezzlement investigation and documentation and negotiation of insurance settlements. Chartered accountant are also known as external auditors or certified public accountant, known as CPA, are not employed by the companies as they are independent to the organizations. The purposes of the chartered accountant are to inspect the financial statement audits for private and public entities. Is carried out on contractual basis by certified public accountant. Auditors general are employed by district, state, and federal agencies. General Accounting Office, known as GAO, and Internal Revenue Services, IRS, are under the federal agencies. IRS auditors are to determine the income tax and to inspect the bookkeeping and records of activities of entities. GAO auditors are to assist in performing audits, observe and study the activities, financial transactions, and federal government accounts of entities. District and state auditors are to determine the sales tax that has been collected and revoked according to the laws and regulation of auditing, executed by qualified employees of the government units.
Chartered accounting firms. The first key point on the chartered accounting firms is structure of firms. There are different types of firms that can be practiced by the public accounting, such as sole proprietorship, partnership, or corporations. Even though a sole proprietor can employ others under them, they are entitled to make all policy decisions related to the firm, while for partnership, they can have either a few partners or more partners owning the firm. However, for corporations, the owners are called shareholders, as they are able to transfer the ownership of the firm to others and with ease, unlike partnership and sole proprietorship. The structure of firm can either be a large firm or a small firm based on the location of the firm. There are 4 examples of CPA, which known as Chartered Public Accounting Firms. The first one will be international CPA firms. International CPA firms is considered to be the largest firms of CPA, since the firms have operations around the world in regard to their employees and revenues. Since they are the largest firms, they are able to provide the full scope of services in performing the financial statement audits. The second one is national CPA firms. National CPA firms is considered to be the second largest firms of CPA, since they have headquarters in other countries and also all over United States of America. They are able to provide a large scope of services in financial statement audits, even though they do not have operations around the world like international CPA firms. The third one will be regional CPA firms. Most of their operations are found largely in certain divisions of United States of America. They are able to perform the financial statement audits. However, some of their revenue is obtained through other services. Last example for CPA firms is local CPA firms. The United States of America are known for having the largest number of CPA firms, which are known as local firms. Since they perform their business within the town area, they usually have a few headquarters only. Local firms are still able to perform financial statement audits. However, like regional CPA firms, they are needed to accomplish other types of services, such as preparing tax returns and consulting about tax matters in order to earn for their revenue. Since they only have offices in the United States of America, they need to earn more for their revenue. The second key point under Chartered Accounting Services is professional services. There are 2 types. The first one is assurance services. It is to refine the standard of the information for the decision makers, which are done by the independent white-collar services. Assurance services are authorized to record the credibility, relevance, and timeliness of information. For example, electronic commerce is an assurance that systems and tools are used in electronic commerce provides appropriate data integrity, security, privacy, and reliability. The second type is non-assurance services. Non-assurance services is a service that does not involve the audit company's financial statements. Examples of non-assurance services are tax planning and preparation, business consulting, or system integration.
I think that's all from us. So thank you for your attention. We hope that this video can make you guys more understand about this chapter. So thank you. Bye.